And I want to get your reaction to those Jamie Dimon comments. So long term, how do you view recession risk? More short term, we get initial jobless claims coming up later today. How are you viewing the market risk when it comes to that? A lot of people think if that number comes in higher than expected, it could reignite those recession fears and maybe create a situation like we saw on Monday.
Yeah, certainly the odds of a recession have picked up, and certainly I'm sympathetic for any sort of job losses that happen out there. But when we come back and sort of analyze this and look at it from a chart perspective, Frank, just look at the 2 to 10 yield curve that you had just mentioned earlier. You're almost back to a normal sloping yield curve. And from a technical perspective, when that yield curve turns to a normal sloping yield curve again, the odds that a recession gets announced by the Economic Cycle Bureau, and that is sort of normal. And at that point in time, when recession is announced, it's more often already done and complete. And usually small mid-cap stocks can do well. I think that would be fitting very nicely into Fed cuts that are coming in the September timeframe. I think now is the time to take a very hard look at small mid-cap stocks on the long side.
Craig, in fact, we're going to take a very hard look at small and mid-cap stocks just a bit later in the show. It's like you're reading our mind. I want to go to something. It almost feels like we're burying the lead here, Craig. You changed your S&P price target. You were pretty stubborn earlier this year. You said you weren't going to change it. You changed it to 5,800 from 5050. A lot of volatility in recent days. What are you seeing that's giving you the confidence to increase your price target this much?
Well, Frank, you got to roll with the changes, and that's exactly what we did. When our 26-week new highs indicator a few weeks ago turned positive, also our breadth measures where we look at how many stocks are above simple 40-week moving averages expanded. There was a huge breadth thrust that took place in the market, Frank, and that was starting to see the Mag 7 stocks come under selling pressure, those I would call the generals in the market, and a rotation down cap. Now, everything is sort of reset again, but all we've done so far, Frank, is pull back to some of the breakout points, whether it's in the Russell, whether it's in the S&P, or whether it's in the NASDAQ. But the most unusual thing that's happened right now, and again, why we want to roll with these changes, is we've seen a correction in the NASDAQ, and we haven't even broken below a 200-day moving average. Same thing with the S&P 500. This is a breadth thrust that I think you want to trust at this point in time, and I think that's why we want to be long equities and why we bumped up our year-end price objective to 5,800 from 5050. This is definitely a pullback to buy.
Okay. You say it's a pullback to buy. Right now you say you're long equities. I want to ask you specifically about the Mag 7. You were just referring to them a short time ago. I'm looking at the valuations of the Mag 7 now compared to where they were a month ago. Apple. Before a month ago, 32 times forward earnings. Now it's about 28 and a half. I could just go down the list. We're going to actually show a wall for the audience. I'm looking at Alphabet, 23 and a half times a month ago, now 19 and a half. NVIDIA earnings coming up, of course. NVIDIA a month ago at 41 times, now just over 30 times. Does that change your view when it comes to these Mag 7 stocks? Does it make them more attractive? You're saying the dip's buyable. Is this where people in your mind should be buying?
Well, I'm not sure that I want to buy the Mag 7 still. I mean, we sold a lot of those names out of the portfolio for us. And, you know, Frank, I go back and I look at these charts. They've had some pretty weak relief rallies. Again, this is where the rotation is coming. And the Mag 7 is clearly becoming the Lag 7. And as I go through and look at all those individual holdings, I'd rather be down capped than playing those particular names at this point in time. I don't think the washout is totally done. And on top of it, just look at the sell-off we've had with the NASDAQ or the NDX at this point in time. You're about 13% off of your highs. A lot worse than what you've been seeing with a lot of the other averages or the unweighted S&P index. And also the SOX, 25% off its highs, Frank. These things don't look like they're fully washed out yet. There was a lot of excesses in those names. And again, that's not something I have to chase or jump at right now. I'd rather buy something in financials. I'd rather buy something in the industrials, sort of getting positioned to come out the other side if we get this sort of shallow recession that Jamie Dimon is potentially talking about.